The labor reports that came out last week were a disaster. It's becoming very clear that the Fed has waited too long to cut rates and the labor market is in danger. We now actually have more unemployed workers than we do job openings, and unemployment is back up to 4.3%, which let the bond market know that rate cuts are coming soon, which then led to the largest single-day drop in mortgage rates that we've seen in nearly a year, as well as the lowest mortgage rates we've seen all year. And these low rates are going to have home buyers saving thousands of dollars a year. On a $400K home with 5% down, from July's 7% rate to today's 6.25% rate, you're going to be saving about $190 a month, or over $2,300 a year. So great news for home buyers. Housing inventory saw a big drop this week, as well as the number of homes taking a price cut. That's actually dropping right now. So if price cuts are already decreasing, then housing prices are probably not going to be going any lower, especially once buyers start taking advantage of these low rates. Inventory was already dropping about 2 months ahead of normal, and that was before this big rate drop. As more demand comes into the market from these low rates, the chance of you getting big discounts or incentives on a home gets smaller and smaller every week. We're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas-Fort Worth area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button, and if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is September 8th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get to the latest weekly market update. Starting with market news. First, let's look at job openings. This is important because the Fed has been pointing to the fact that there have been more job openings than people looking for jobs. And now that is no longer the case. Job openings last month were at 7.2 million, and the number of unemployed people was at 7.4 million. This hasn't happened since April of 2021. So I want you to look at this chart. You can see job openings were insane during COVID. Everyone was quitting their jobs for higher paying jobs. Wage growth was out of control, the federal funds rate was negative, mortgage rates were at 2.5%, and there was just way too much money flowing around, which led to a lot of inflation. So you can see now we're all the way back to normal. This is where we were pre-COVID. So when it comes to this part of the labor market, there is no longer a need for high rates. The inflation of job openings, as you could say, is gone. Now onto the BLS jobs report. We only had 22,000 new hires. We only had an increase of 22,000 new jobs in August, which brings us down to an average of 29,000 new hires each month from June to August, compared to last year where the average was 168,000. And in this report, June's numbers actually got revised way down, so that instead of creating 14,000 jobs, we actually went to a negative 13,000 jobs, making that our first monthly loss in employment since late 2020. Guys, just look at this chart. This is the monthly change in jobs, and you can see this trend is going down and down and down, and we finally in June got our little first 13,000 negative. Look at this trend. This chart is going to start consistently going negative if the Fed doesn't cut rates soon, which means the Fed is going to cut rates soon. But also, it's more complicated than that, because the whole point of the Fed raising rates in the first place was to stop inflation. But now inflation is starting to creep back up, and we really don't have any way to know yet what's going to happen with tariffs regarding inflation, which means the Fed now has to decide either we let the labor market collapse by keeping rates high, or we let inflation go up by cutting rates. If I were a betting man, I would say they're much more likely to cut rates, save the labor market, and figure out inflation later. Then, as I mentioned, the unemployment rate is back up to 4.3%. If you'll remember, the Fed's target that they announced back in December was they want to get inflation below 2% without unemployment going above 4.3. And we actually haven't been at a 4.3 since all the way back here, which was July of 2024. So more than a year ago was the last time unemployment got this high. And the Fed does not want it to get up to 4.4. That would be above their target. And the last thing you need to know about all of this is that the low mortgage rates you're seeing right now are the bond market already pricing in the amount that they think the Fed is going to cut rates. So from July to now, mortgage rates have dropped 0.75% without the Fed cutting anything, which means if the Fed's rate cut actually ends up being smaller than expected, mortgage rates are going to go back up up accordingly. And if the bond market is correct and the Fed ends up cutting exactly what they thought it would, then once the Fed announces their rate cuts, nothing is going to happen. Mortgage rates are not going to go lower because it's already priced in. I'm saying this because I have people tell me all the time they're waiting for the Fed to cut rates. But by the time the Fed cuts rates, mortgage rates will have already moved lower weeks ahead of time. So the mortgage rates you're seeing today is essentially the Fed rate cut that's coming in the future as far as mortgage rates are concerned. So don't be expecting mortgage rates to go lower once the Fed announces they're cutting rates. We already know they're cutting rates. That's why mortgage rates are already low. Don't ever wait on the Fed. The Fed is old and slow. The bond market is what you need to be worried about, and they price things weeks ahead. All right, moving on, we're starting with national housing inventory. And before we look at any of the data we're about to look at, this data cuts off and reports, I believe, on Wednesdays, as well as last week we had the Labor Day holiday. And as you know, holiday weeks are short and the data gets very skewed. And this week is going to be even more skewed because it didn't include the data that came out on Friday, the labor report and the big rate drops. So I would expect this week's data and next week's data to be vastly different. So if ever there was a week to not rely heavily on the data, this is the week. But looking at housing inventory, this week we had a big drop. We had 14,212 less homes for sale in the country compared to last week. This drops us a full 2% down to just 20% more inventory than last year. And remember, earlier in the year, we got as high as 33% more inventory than last year, which means that gap has closed by 13% in just the last few months. And this is very unusual. I've been talking about it for the last few weeks. You can see in recent years, that's here, here, and here. Inventory was going up until October, November, and this year it peaked, it looks like, in early August. I don't see any way that this inventory is going to come back up, especially with rates dropping. So earlier in the year, when rates were higher, we saw inventory going up, more people listing, we were starting to see price drops, and that's all going away very quickly. So unless mortgage rates go back up quite a bit, we have seen the inventory peak for the year, which is 2 months ahead of normal. But we had a decrease down to 860,728 homes available for sale in the country, but we decreased down to 846,515 homes available for sale in the country. This same week last year, inventory was only at 703,376, so still much better than last year, but you can see the percent of inventory that we have more than last year is getting smaller every week. And for reference, the all-time inventory bottom here in 2022, we only had 240,000 homes for sale. At the peak of last year, we had 739,000 homes for sale. And once again, this week we're at 846,515 homes for sale. Now moving on to new listings. This week we have 921 more new listings than we did last week, which is still, you can see these dots are almost on top of each other. It's 440 less new listings than the same week last year, for a total of 64,682 new listings this week. And if buyer demand continues to increase like it is, and new listings remain sluggish like this, then we're going to continue seeing inventory dropping. And you can see, looking at the previous 3 years, this trend is pretty obviously just going to continue down like this. It's very consistent through the end of the year, which also means from here until the end of the year, if you don't like the homes on the market now, you are going to have less and less new options coming onto the market every single week. So do not get picky. If there is a home that you like enough to offer on, don't wait hoping that something better is going to come on. The evidence is right here. There are going to be less and less new listings every week. Now looking at pending sales. Pending sales had a big drop this week, but you can see that's normal. It happens every single year this week. Again, holiday data is always skewed, but pending sales decreased by 15,688. But even so, we still had 605 more homes pending than last year, for a total of 359,275 homes pending. Then looking at single family weekly pending sales, just think of this as new contracts. This week, new contracts decreased a little by 533, and even though we dipped week to week, we still have 3,315 more homes going under contract this week compared to last year, for a total of 65,168 new single-family contracts. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year, it's normal for a third of homes to take a price cut before selling. Looking at the national chart, you can see for the first time we had a pretty significant drop a full 0.6% down to 41.5%. And you can see so far the bright red line 2024, we've been following very closely to that trajectory. And again, this data does not reflect the big drop in mortgage rates at the end of the week. This data reports, I believe, on Wednesday. So this is unrelated to the mortgage rate drop, but even so, it already looked like the top was going to be in just looking at the trajectory from the previous year. I don't think we're going to get any higher than we've already been. And last year we got as high as 39.9%. The year before we got as high as 39.2%, and in 2022 we got as high as 43.2%. And just know, if you want home prices to come down, this number would need to continue up, and I don't think it's going up any from here. I think inventory is going to decline, and if mortgage rates stay here or drop even further, more and more buyer demand is going to come in. So I'm just going to keep saying it. Right now is probably your best chance at getting a big discount on a house. If you wait, it's going to get more competitive. You're going to have less homes to choose from because there's going to be less new listings, there's going to be less overall inventory, and there's going to be less price cuts. You can see it starting right here, and you can see it should curve down for the rest of the year, just like it did last year. Okay, looking at mortgage rates, we started last week at a 6.53. Then as the job reports came out at the very end of the week, we got all the way down to 6.29, and we started this week at a 6.28. And the craziest part of all this is the exact same thing was happening last year. You can see at a 6.29, we were a 0.6 better rate, but today at a 6.28, we're actually 0.01% worse than a year ago. So we're basically exactly where rates were a year ago. It's crazy how that works. Then looking at mortgage purchase applications, this is our best leading indicator to what demand is going to look like 30 to 90 days from now, as that's how long it takes to contract, find a house, and close. But this week in purchase applications, we had a 3% decline. Again, it's a short week, it's a holiday week, so of course there's going to be less. But even so, it puts us 20.4% higher than a year ago and gives us 28 straight weeks of positive year-over-year growth. But I've been saying it for way more than a year now. There's no reason to believe that real mortgage demand, real buyer demand is going to come in or grow significantly with rates this high. That's going to happen when rates get and stay below 6% for a sustained period of time. And we're getting pretty close to 6% pretty quickly. Like one more bad jobs report, and I think we could be down at 6%. All right, moving on to the local markets. Starting with the MLS data of Dallas County, we had 651 new listings this week. But before you get excited, that's 163 more than last week. But if you average the last 2 weeks out, we should have known this is around a holiday week. Things always get weird. If you average these two out, it's right in this same line. I think it was like 560 something. So big drop, big jump. Overall, it just averages out to normal. But 651 new listings, that's great news because 488 was actually pretty scary last week. So it's good to know we're still going totally normally. 209 closings, which is a drop of 107 holiday week. Of the homes closed, 30 were immediate sales, meaning they contracted in the first week, 22 less than last week. Again, not only the holiday week, but these are homes that contracted more than 30 days ago. So not reflective of today's market. 268 contracts, that's 11 less than last week. And in total, there are 2,075 homes either under contract or pending. That's 13 less than last week. Moving on to Collin County, we had 422 new listings. That's 82 more than last week. Similarly, they had a huge drop last week and a big bounce this week. Not as exaggerated as Dallas, but still both of these numbers averaged out, gets you much closer to where they've been. We had 166 closings, which is 151 less than the previous week. That's what holiday weeks can look like. 21 of those were immediate sales. That's 23 less than the last week. We had 157 new contracts, which is 33 less than the previous week. Holiday week again. In total, 1,921 homes either under contract or pending. That's 43 more than last week. Now we're moving on to the Market Action Index, starting with Dallas County. If you've never seen it, it takes into account all this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in? And I'm just going to start out by showing you we actually had a tiny increase in the Market Action Index. Now, we just look at this to see are things looking normal or unusual, and so far everything has been pretty normal other than inventory has been dropping earlier than usual. But overall for the rest of the year, the market should be cooling off. So now what's unusual is, and this, I wouldn't call this an increase, you can call this flat, but what should be happening is things should continue cooling off, and instead they've been going pretty flat for a while, but this is the first time we actually had a slight increase. So that's unusual for this time of the year when the market should be cooling. It's actually stalled out on the cooling side, and there's a chance it could start heating back up. Just we have to see what happens with rates and inventory. But so far, median list price has held right at 400 for the last 3 weeks, and I would be surprised if in the next 1 to 2 weeks we don't see this number start coming up a little bit. Median price of new listings is still as high as it's been for a while. We just had that 1 week where it shot down, but it came right back. We're at about 380. You can see overall the trend is down, but pretty sideways. It's like a tiny bit down, mostly sideways. Average days on market, we're used to seeing this go up every week. It completely stopped this week. It's at 98. Median held at 63. Price decreases, just like nationally, you're seeing them start to come down. That's unusual. Inventory is obviously coming down. That's a big drop, 60.20 to 58.70. That's unusual. And the crazy part is this data is not really reflecting those mortgage rate drops since it just happened on Friday and nothing changed over the weekend. So even before that big rate drop, things were already starting to shift. Now looking at Collin County, they have been a 32, slight seller's advantage. They've been cooler than Dallas County pretty much the whole time. Their median list price saw a tiny drop down to 525, but you can see the trend has clearly been down. Their median price of new listings as well is on the lower end of their range, but you can see the trend has been down. Those things are normal. Average days on market stalled out as well, just like Dallas. Here it's at 88, whereas Dallas is actually at 90. Their median days on market, flat at 63. Price decreases not dropping yet, well, slightly dropping, but not like we saw in Dallas or nationally. I would say that's pretty much just flat. But again, that is unusual. You would expect it to be climbing this time of year, and instead it's flat. Their inventory clearly curving down as well, the same as nationally. That's unusual compared to the previous 3 years. And their market action index, that's as flat as you can get. 0.02 is what the drop was. So where we would expect this to continue down, basically at that same slope that it's been at, it instead stalled out completely. And with these low rates, there's a chance it could start to curve back up through the end of the year. So that's unusual. We're gonna have to wait and see what actually happens with rates moving forward. And I'm telling you, one more bad labor report, and we're gonna be pretty close to 6% rates. All right, now we're moving on to the hottest and coolest cities and zip codes in all of Dallas and Collin counties. Starting with the hottest cities, these are ranked using that same market action index number we just discussed. Lancaster popped on out of nowhere a few weeks as the #1 hottest city in all of Dallas and Collin counties. It's a 39.53. So Lancaster and Carrollton remained in the top 2 spots. DeSoto heats up 2 spots. Coppell cools off 1. Grand Prairie heats up 2. Grapevine cools off 2. Saxe heats up 3. Duncanville cools off 1. Richardson cools off 1. And Irving jumps onto the list at number 10. And Princeton, which was number 9 last week, cooled off the list this week. Then we like to zoom into specific zip codes. The absolute hottest is Irving, 75061 at a 46.67, followed by Grand Prairie, 75052, Garland, 75041, Carrollton, 75007, Dallas, 75206, Lancaster, 75146, Dallas, 75248, Lancaster, 75134, and Richardson, 75080, and Irving, 75062. So if you have a home in one of these zip codes, you should be able to sell for top dollar. But also keep in mind, 38.85 is not a super hot market. It's just, even though it's one of the top 10 hottest zip codes, it's not crazy hot. Same thing looking at the coolest cities and zip codes. White cools off 1 spot to take the absolute coolest city. Anna heats up 1, Leonard remains at 3, Nevada jumps on to the list all the way to the 4th coolest city. Then Rockwall heats up 1, Royce City heats up 1, Prosper jumps onto the list at number 7, Salina heats up 3, Sunnyvale heats up 1, and Lavon jumps onto the list at number 10. So Nevada jumps on at number 4, Prosper jumps on at number 7, Lavon jumps on at number 10, and then Blue Ridge was number 5 and it fell off, Anna was number 9 and it fell off, and Van Alstyne was number 10 and it fell off. Remember, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.